Hello traders, it's Sunday evening, March 5th. Let's get right to it. The last pick that I had was VTNR. Right now, my market bias is I'm neutral to slightly bullish. I really like selling naked puts on cheap stocks. I want to generate income over the course of the next few weeks while the market is moving sideways. You've got a lot of news coming out right now. I want to find stocks that have really solid support that I can lean on, sell these options below technical support, take advantage of time premium decay. Here's the bottom line. If I get assigned, I want to buy the stock. I am a willing stock buyer. That's the premise for this. I am not over leveraged. Please give me the stock. I'm a willing buyer. I'm slightly bullish here. I think the market is starting to make a bottoming process. That doesn't mean that I'm aggressively buying right now, not out there buying shares, but push comes to shove, market pulls back, stock pulls back, I'm a willing buyer. I'll take those shares. Maybe I'll hang on to them for a while. Maybe I'll sell some calls against them, generate income that way. That's the mindset that I'm currently in. So VTNR was a stock that I showed you last week. I love this. Friday, we were looking at this trade. I love this breakout right here through horizontal resistance. I love the big volume. I love the relative strength. I love the fact that the stock has been able to hold its own when the market was drip, drip, dripping lower. What was the stock doing? It was holding its own above a major moving average. Lo and behold, earnings, zoom. See you later, big volume. I would be a willing buyer right here at that 200-day moving average. So I'm going to sell the $10 puts for 50 cents. Those options are currently trading 15 cents bid, offered at 22. Winning trade. Well, is it a closed position? No, it's not. So it's not a winning trade yet. I'm going to let this ride until the March 17th expiration. I am a willing buyer at $9.50. So I could buy those options back in for a gain. I want to buy the stock. I'm not going to do that. Please, stock, pull back. I'll buy you. So we're going to look for a similar type of situation right now. It's a great way to generate some income while the market is compressing. Day trading, on the other hand, has become more difficult. The intraday ranges are not what they used to be. Right now, the ATR, 20-day ATR for the S&P 500 has been about 6 versus 9 back in November. So we're not getting the intraday movement that we're used to. Let's shift our focus just for a moment to the market. Let's take a look at what that's doing. Here's your price action from last week. So we had this nasty drip lower. Notice that there were not a lot of overlapping candles. So the sellers were able to drive the market down. But we didn't see any stacked red candles either. And that tells me that buyers are still engaged. In fact, for the last few months, what do you see? Up, down, up, down, up, down. Okay, there's a nice little drop. I believe this was inflation related, so we get a little sell-off, and then instantly, there's support. Higher low, double bottom, floating around the major moving averages. Now we actually drift above the major moving averages, and we stay above all of them for quite a while. This is not just a poke through them and a fail like we saw a year ago. That tells me that buyers are interested. Does that mean that you should go gangbusters right now and go out there and buy everything in sight? Heck no. Still plenty of dark storm clouds. We've got the Fed hawkish as can be. We have inflation still ticking higher. We've got signs that the economy might be slowing down a little bit. We have an inverted yield curve. Okay, those are danger signs, but I'll also tell you that asset managers are not asking themselves if GDP is going to fall in Q2 and if they need to be worried about that. Their mindset is, will the market be trading higher than its current price a year from now? If the answer is yes, then I'm starting to put some of the record cash levels that I have on the sidelines to work. And that's why we have a market bid right now. So can we expect some herky-jerky back and forth? Sellers are in control, buyers are in control. Absolutely. That's why I'm not willing to get more aggressive with my long positions. I want to sell some implied volatility. I want to look for stocks that have really good support. Yes, in some instances, I'll be selling out of the money bullish put spreads. In some instances, I'll be selling naked puts. I want to acquire the stock. That's a really nice swing trading strategy. That's one that I'm currently focusing on. Yes, I still like day trading. Of course, I like day trading. But finally, after a year, I'm able to show you some nice swing trades. So that's what I'm focusing on. Yeah, heck yeah, there are a lot of good day trades. And right now, we saw the market pull back to these major moving averages. It tested these major moving averages, doink, 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 3 times off the 200-day moving average. And then we get a release higher through the 50-day MA. Then Friday, gap higher, market holds all the gains, continues to edge higher. Here's the M5 price action from Friday. It was kind of a tell because if you have a nice rally off of the 200-day moving average and you've had selling pressure for the last 3 weeks, what would you expect to see? Well, if you get a gap higher like this, sellers are going to come in and they are going to play whack-a-mole. Whack, 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 whack. Huh. Couldn't drive the market down. The opening gap higher held. That is a sign that buyers are engaged. They want in. Okay, so once the bid is tested, you get this breakout to a new high of the day. You're already above the prior day's high. We're above the 50-day moving average. Tick, 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 higher all day. Market closes near its high. Again, does this mean that I'm super bullish? No. Buyers and sellers are jousting right now. What the market has been doing, it's likely to continue to do. And we see that in the daily chart. So yes, we sold off. We came down to a support level. That support was confirmed and we've bounced off of it. So what's the next week look like? What do the next 2 weeks look like? What do we need to be aware of? Well, this week we've got some pretty major economic news. We have ADP coming out on Wednesday. We have the jobs report coming out on Friday. We had ISM manufacturing last week and ISM services. ISM services actually pretty decent at 55.1, I believe. ISM manufacturing a little bit on the light side, but not bad. Again, when you look at both numbers, truth be told, ISM manufacturing is small relative to ISM services because 80% of our economy is service-based. So that really is the more important number of the two. That came in pretty decent at 55.1. So we've got the Fed who's been hiking rates like crazy. What are we going to do? We're going to go to 6%. We're going to go to 6.5%. We're going to go to 7%. We're toward the tail end of that tightening cycle. Whether they increase a half a point or a point from here, whatever it is, we are closer to the end than the beginning. Sooner or later, inflation is going to start to wane. Don't know when we're going to see that, but if we see that, the market is going to respond in a positive way. I don't know that it's going to be in a month or 2 months. I really don't care. All I can tell you is that I am seeing, based on the price action, that money is being put to work. So we're going to look for stocks that have a nice support level where we can generate some nice income by selling option premium. So the jobs reports, it's one of those deals where I'm not expecting a bad jobs report. I'm expecting a decent jobs report. Initial jobless claims have been coming in the last 4 weeks very, very strong. These employment numbers should be good. What does that mean? Well, the economy is on sound footing. So that means that a soft landing is still possible even after all of this Fed tightening. That's a good thing. Does that mean that we're going to rally after we get a good ADP number after we get a good jobs report? Not necessarily, because good news is bad news. If the economy's strong, then the Fed might still continue to raise rates. Yeah, the market could sell off on that news. Bonds certainly have been selling off. So we are seeing in the bond market, I'm going to bring up the TLT right now. You can see this is a major trend line breach right here. We get these stacked red candles. 100-day moving average breach with ease. Now we can't get above it. Although Friday we did bounce a little bit. There was another trend line that came into play here. Bond market is starting to find a little bit of support. So the stock market is going to take its lead off of the bond market. You do want to watch what's happening in the bond market. We did have some Fed speak last week, and generally it was pretty hawkish, but also neutral in the respect that the market did not sell off. We have the FOMC after this week. We've got inflation numbers coming out as well. Those are really going to determine market direction. There is one component that we need to be aware of this week. I'll be watching it closely. It's the hourly wages component of the unemployment report on Friday. Now, it came out at 0.4% last month. Anything in the 0.3, 0.4% range, that's going to be pretty benign. If you start seeing something in the 0.6 range, that is hot. The largest input cost for employers is wages. So that's inflationary. Really want to see that number stay around 0.3, 0.4 for the bullish scenario for the market. So if I look at what's happening in the SPY on a daily basis, daily chart, we've got these major moving averages. We're spending time above the major moving averages. We want these major support levels to hold this week. If they are tested during the FOMC, during the inflation numbers, we want them to hold. If they do, then there's a pretty good likelihood that the market's still going to muddle around. This is a bottoming process. Typically, the market, when it goes into bear market mode, you're going to see these big sell-offs, and then eventually this downward sloping trend is going to eventually flatten out, and you're going to get a horizontal range, maybe for 6 months or so, maybe longer, but eventually corporate earnings are going to catch up to their valuations. Everybody's going to take a deep breath. Now that the Fed rate hikes have gone through their cycle and the economy bottom has not fallen out, okay, we've got a chance to start to recover from all of this. And then gradually the market will start to rally. I think that's where we're at right now. We've got this nice low here. This was a marginal new low, and now we have a higher low double bottom. I'm expecting these major moving averages to hold. I'm not gangbuster bullish though. That's why selling out of the money naked puts really works well here. If you like the stock, if you are willing to buy shares of stock, this is a great way to generate income while the market is kind of waffling around trying to digest all of this information. So that's what we're going to be looking for tonight. I'm going to zoom back in so we can see what's going on with the market. We'll just have that in the background because the market is closed right now. But the price action Friday was very, very, very steady. You can see tiny bodied candles, very little in the way of retracement. This was a bullish trend day, and the volume the entire day remained strong. It's a good sign. It tells me buyers are engaged. The bottom of the market is not going to fall out. No matter what you see in the headlines, and believe me, they are super negative right now. I think the market's going to be able to tread water in here. So let's see if we can find a stock. We'll go through our searches, and I'm going to cut to the quick a little bit. It's Sunday night. I know that we all want to get set up for the week. let's find a pick. Let's gauge it, see what it does. So the variables that I selected for this search on custom search and Option Stalker Pro, bullish, strength versus the S&P 500 on a daily basis and on a 4-hour basis. So we want stocks with relative strength. We always want that. The stock was above the prior day's high. That's at minimum what I want a bullish stock to do. If it can't get through that minor resistance level, I do not have any interest in it. Good option liquidity. Great. We're selling some puts, so we want to have good option liquidity. Value of -1. Heavy volume yesterday. Sweet. Show me a stock that on Friday had some decent volume. Well, these are the results. And there's some decent picks in here. I could go through them point by point. Maybe I'll pick one other one out because I had looked at it, but the pick of the day is going to be SHOP. Earnings after the close. This may be contrary to what some of you believe because I always want to see good earnings reactions. I like to see a stock that is lifting off after an earnings report because that tells me that everybody liked the number. In this particular case, you can see how the stock had been moving higher with the market. It pulled back right in here, but it preserved those major moving averages. As soon as the market started to lift off a little bit, so did the stock. As the market was pulling back, pulling back, pulling back, you could see the gray line is the S&P 500. What did the stock do? It was already starting to find some support in here. Tiny little bodied candles, very compressed action on this drop right in here. Did the stock get buried? Well, after a negative earnings announcement, if there were still lots of sellers, what you would have seen is stacked red candle, stacked red candle, stacked red candle. We didn't see that. We saw these tiny little bodied candles, so the market's coming in, but the stock is already finding support above the 100-day moving average. It is above the 100-day moving average, so we want to lean on that 100-day moving average. At a time when tech stocks have largely been pummeled, SHOP had been above the 200-day moving average considerably. Been holding up pretty well relative to the tech sector. So let's use that exercise right now and let's see how it stacks up to what's been happening in the tech market. So I'm going to overlay the QQQ, and here you can see QQQ had been absolutely destroyed back in here. Not this stock. No, it's got a bid. It's able to hold a 100-day moving average and actually move higher. So this stock is fairly resilient. I like it. I want to buy it. I want to buy it below the 100-day moving average. Will you give me a chance to please buy this stock below the 100-day moving average? I'm a willing buyer there. If that's your mentality, this is the strategy that you want to use. So I'm going to bring up the options chain and we'll put up SHOP and we'll take a look at where those options closed. So we'll be looking to sell them below the 100-day moving average. Somewhere around the $38 range would be great. So let's go out a couple of weeks, maybe the March 17th expiration, and we'll go down to, since I'm a willing buyer at the 100-day moving average, that comes into play at 38.43. Let's look at the 39 puts. 39 puts are 37-cent bid offered at 40 cents. So for this position, I am going to have to put up 20% of the strike price. In this case, $3.90 times 2, which is $7.80 to make 37 cents, 38 cents. So it might seem like a tiny little return. That's 5% in 2 weeks. That's not a bad return. And what's my downside risk to this? Well, I am going to own the stock roughly at 38.50. So 38.50 puts me to that 100-day moving average where the stock has been able to find support before the market was even rallying. So if the market takes off, this stock should continue to grind higher. Again, it's already been showing some signs of relative strength previously, earlier, like 2, 3 months ago, relative to the tech sector. You can see that it's just coming above the zero line as far as relative strength. I'm comfortable owning the stock at that price. If I can make 5% in the course of 2 weeks, I'm good with that. That works for me. That's a decent return. Good risk reward ratio. So I really like SHOP. Think that's going to work out well. Let's take a look at a couple of other stocks that came up on the list. I could click right through these. It's going to take too long, quite honestly. I do also like Meta. That is a nice looking chart. And the reason that I like it is look what tech has done. Down, down, down. Remember, we've got the QQQ overlaid here. What did Meta do? It was finding support long before tech stocks. In fact, this gap right here was preserved. I like Meta. I think Meta sets up very, very well for a bullish put spread out of the money. I like it on the long side. That's one of the stocks that came up. OKTA, another really nice tech stock. Compress, 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 tiny bodied candles. Blam! After earnings breakout. Yeah, I like OKTA. I think that stock could continue to go higher. Heavy volume here. The longer and tighter the compression, the bigger and more sustained the breakout. It's above the 200-day moving average. Yeah, I like it. If you are using Option Stalker Pro, this is a really nice, very basic search to use. Show me stocks that have relative strength on a daily basis, on a 4-hour basis, that were above the prior day's high, have good option liquidity, and had good volume on Friday. We've got lots of searches that you could run. This is very basic. So yes, we got some excellent candidates out of this very simple search. I haven't clicked through all these, but if I did, I'm sure I'd find other candidates as well. SHOP, that is a naked put that I like selling, keying off of that $39 strike price using the March 17 $39 puts, selling those for somewhere in the 45-cent range, generate a 5% return over the course of the next couple of weeks. If we don't get assigned on the stock, it's okay. We're going to continue to use this strategy while the market kind of muddles around. We're going to wait until that FOMC statement comes out. We're going to see how the inflation numbers come out. If by chance, and I'm not predicting this, if by chance inflation is starting to come in a little bit, I think we could see a decent little market rally. Well, if that happens, then we're going to take a little bit more of a bullish stance. And I am a little bit PO'd that I exited that Boeing trade, which I normally would have wanted to see what that breakdown was going to manifest into, but I also wanted to show you how to leg out of a bad spread. And I felt that I had the right opportunity to show you how to do that. I just didn't get any follow through selling on Monday or Tuesday, even with a bad market. As I mentioned in my last video, the fact that the stock did not sell off with the market told me that this stock was going to be moving higher. If I get really bullish, this is one I would consider flat out buying some deep in the money calls on when it breaks through this horizontal resistance. If that happens, I'll make sure and highlight it in one of my videos. Thanks so much for watching. I know it's Sunday evening. I'm going to try and do some Sunday night videos. They seem to be very popular. I hope that this helps you set up your trading week. Thanks. Have a good night. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.